Good morning, traders, and welcome to the live stream. My name is Charles Gough. I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. This morning, we are going to be taking a look at the ES and trying to make some predictions about where the market might go today and this week. We're going to use the auction process as a way to figure that out. But before we do, real quick, I just want to mention a couple of things from Bookmap here that are worth mentioning. So if you're not aware of this blue jacket club that the Bookmap basically has, this is like the best traders, the traders that show up and share their trade ideas, and they use them, to judge who's the best trader. And then they give out these awards. Okay. So one of the things that these traders talk about on a regular basis is that the add-ons that you get with Bookmap are what give you the edge. So I just want to remind you guys some of the discounts that are going on right now with Bookmap that you can take advantage of. So first off, you got the Black Friday deal that's going to the end of this month. It's 50% off Global Plus quarterly. So that's if you're going to pay quarterly for Global Plus. You got 60% off monthly if you're going to pay with monthly. And that, again, goes until the end of this month, until the end of December. You got the add-ons are 50% off again until the end of this month. And this is the one you don't want to miss. If you have Bookmap and you don't have the Stops and Icebergs add-on or whatever you want to use, this is the time to sign up for it. Get it at 50% off. See if it can give you an edge in your trading. See if it can get you to the level where you could become a blue jacket. Okay. All right, let's jump into the TA for the day and we'll see what's cooking in these markets. So last week, the name of the game was balance and breaking out of balance. So this little box, let me get my drawing tool up and running here. There we go. So this little box that you see right here, this is what we call a balance area. This is basically a range that the market gets stuck in over a period of time where it's trying to break out of that range. It tries to break out to the downside. If it can't, it turns around and heads up to the high. Okay. Well, last week, what ended up happening was we re-entered the balance area on Thursday, but we didn't go all the way to the opposite end of balance. We then found support and turned around and came back up for the balance area high. Okay. Which is the upper end of this range. Why is that relevant? Why does that matter? Because often, if the market doesn't make it all the way to the lower end of balance, that next one is the one where we break out. That next one is the one where we have success. So it was no surprise when we came back on Friday that we were able to successfully break out of that box, right? There you are. We broke out and we stayed out. Okay. So all of that is bullish to see. The fact that the market balanced last week is bullish for this week. Why? Because balance leads to momentum, right? We talk about balance much like an old Jack in the Box, right? Where you would, spin the thing. Not that Jack in the Box, this one, these right here. Where you would twist this knob, you would twist it and twist it and twist it and twist it, and you never knew when that jack was going to pop out of the box and scare you. Okay? But the twisting and the twisting and the twisting guaranteed that he was going to pop out the box because there's a spring inside of there, and the more you twist it, the tighter you get that spring. Okay? And so if we spend a week going sideways like this, that's what we're doing. We're winding up that spring tighter and tighter and tighter and looking for the market to break out to the upside. Now, often once the market does break out to the upside, it makes a move at least the size of the balance area. So looking at this balance area from last week, that was roughly from 68.10 to 68.65. So a little over 50 points. We'll call it 55-point range. So that means the breakout of this balance area should take us at least 55 points higher. Okay, so the target for the breakout is 69.19. We'll just call it 69.20. Okay, that is the target for the market to make it to. Obviously, we haven't gotten there yet. We're at 68.91 right now. So that implies, purely through that jack in the box effect, that we wound it and wound it and wound it and wound it. Now we're ready to actually make that break, to actually head up. So that has me bullish this week, saying, listen, as long as we're above that previous balance area high, we should be heading up to 69.20. That's where we're going. Okay, now I can't guarantee whether we'll get there today or not, but that's the next stop, bigger picture for the market, purely as a breakout of balance. And so that is bullish to see, and that has me feeling bullish this week. However, there are two very important nuances about the way that the market moved on Friday that we need to take into account. First off, when the market breaks out of balance like that, it should get a momentum day. Now, there's two ways in terms of the shape of the market profile chart. Okay, when we're looking at the profile for the day, there are two different shapes that we can get from a profile that tell us the market has momentum. The first is what we call a P-shaped profile. So in that case, the market would open, it would push up, and then it would go sideways in the upper end of the range. Okay, so by the end of the day, we've got that P-shaped profile. The other one is what we call an elongated profile, which would be the market opens, it pushes up, it goes sideways for a while, it pushes up, it goes sideways, it pushes up, and then it closes near the highs. Okay, that's an elongated profile. So whether you get the P shape or the elongated, both of those are a sign the market has momentum up, which again is what we're expecting. If we're on day one of this move up to 69.20, we would expect there to be a lot of momentum because we've still got a far way to go, right? But we did not on Friday get either of these profiles. Instead, we got what's called a bell-shaped curve, which essentially means that the market just looks like a bell on its side. Imagine that's where the little ringer is. Ding, ding, ding. That's the bell. Okay? It created a bell-shaped curve. As a matter of fact, it closed almost exactly the same place it opened. We closed on Friday just a few points above where we opened. Okay? So that's an important nuance to be aware of. If what should happen is momentum, but the momentum doesn't happen, well, then maybe what you think is going on isn't actually going on. Okay? So we always want to be aware of that. We're bullish. We think this market is going higher this week, but the fact that we balanced on Friday means we may still be balancing. That jack in the box may not have popped yet. And that would mean we would need to come back to this balance area high again. The other thing that happened that we want to be aware of is the overnight range over the weekend. Okay? So this is Europe and Asia trading in here. What did they do? Bell-shaped curve. Just went sideways. Okay? Now, the overnight inventory is net long, but in general, this is balance. This is the market going sideways. So what does that tell us? Again, the same thing as Friday being balanced. It tells us we may not be ready for that big move just yet. Okay? Up to 69.20. So what will we be looking for as signs intraday today to tell us we're ready for that big move to the upside? That would be support above the overnight high. So when the market opens, to me, this area right here between 68.73 and 68.94, this area is what we call a chop zone. So it's hard for me to know whether we're going up today or down today, as long as we're inside that range. But if we poke above that overnight high, if we get above 94 and we get new buying, I will get bullish very, very quickly. Okay? Because new buying intraday today above that overnight high, above 68.94, would be the confirmation we've got the breakout. We've got the momentum. We're heading for 69.20. Okay? That is buying above 68.94, which essentially sets us up for a 20 plus point move. Okay? Now, let's say the market opens and it goes sideways inside this overnight range and it gets below that overnight low and it starts to get resistance there. It starts to get new selling. Well, what is the market telling me if that happens? It is not telling me that the market is bearish. It is not telling me this market needs to have a huge dip. It is just telling me the market needs to come back to the balance area high one more time. So if we get new selling below 73, I will be bearish, but only to get down to 64, okay? Which is just like a 10-point move. That's it. Once we get back into the previous balance area, once we get back into 68, 64, then we watch what happens next. If we don't spend a lot of time and we immediately bounce up and out, then it's bullish because it was just a back test of that balance area high. That would mean now we're ready for that jack in the box moment. Okay? If we come back into balance and find support again, we're definitely ready for that jack in the box moment then. But if we were to get back down in that balance area and start to spend time and bring in volume down there, then it would be very, very bearish. So this is how I would describe myself. For day trades, I'm neutral inside the overnight range, bullish above for a long, bearish below for a short. Okay. If I take the short, I'm locking in profits quickly at 68, 64. Whereas if I'm getting into the long, I'm going to hold that as long as I can. I'd rather trail a stop and let it push as far as it can push rather than, just lock in profits real quick at, say, Friday's high or something like that. Okay. Now, let's say I lock in profits on the short at 68, 64, and we get new selling inside of there. Well, then I'm bearish. And I'm bearish for a move all the way down to 68.13 in the days ahead. So same thing there. The first short would be a quick one, just lock in some profits. But if we got new selling below 64 today, then that short that I would get in would be one waiting for the bigger move. Okay. Now, bigger picture. So that's intraday trades, entries. Long up here, looking for a big move. Short here, looking for a short move. And then short here, looking for a bigger move if we get new selling. In terms of what I think is the most likely to happen, to me, the highest probability, the most likely thing to happen this morning is that the market will open. It'll go sideways for a little bit. It'll get above that overnight high, and then it will begin the process of going higher. That's my first most likely scenario. The second most likely scenario would be the market comes down, gets below that overnight low, gets new selling, comes back to test the balance area high. Once it does, it finds support, and then we start to move. That's number two, most likely scenario. The least likely scenario in my mind today would be the one where we come back down, we get inside the previous balance area, we get new selling, and then we sell off lower. Now, to be clear, I'm not saying that that's impossible, that could happen today. And absolutely, if it does happen, I'm going to be getting short for that. Okay? I'm just saying as of this moment, 15 minutes before the opening bell rings, that to me is the least likely scenario. Any questions on any of that from the chat? If you're watching this on YouTube, you can leave your questions in the YouTube chat. If you are watching this on the Discord, you're going to want to head to the Futures-Charles tab and leave your questions there. Trader in the house, good morning to you. On Piss Tom says, how come pirates pay for monthly deals? Isn't the point of being a pirate getting stuff for free and having poor teeth? It's a great question. So the pirates would steal the loot, but they still had to pay somebody to make them peg legs. You know what I mean? They still had to pay somebody to make them a sword or a cannonball. The weapons that they use to do their piracy, they actually would purchase. Now, the piracy itself, that they would get for free. And what would they have to risk? Well, their life. Their life. So what do? Since we're pirates? Well, we pay for the tools, right? If we need Bookmap to be able to recognize changes in order flow, if we need market profile software to be able to see the market in 3 dimensions, well, then we pay for it. Like if we need a new peg leg or an eye patch, right? We just pay for those things. But then we use those tools that we've collected to go pillage and plunder the markets, to go swim on the high seas of the SPX and take treasure from our competitors. But we do have to pay for that peg leg. Elite says, would looking at the NQ Bookmap while trading the MNQ be better, or just sticking to the MNQ? Boy, that is a great question. So if I was trading the micro minis for the NQ, I would be looking at the actual NQ. For I guess it doesn't really matter for market profile. Yeah, it does actually for volume profile. Yeah, so for both markets, I would say look at the main market, because what you're looking at over here when you're looking at Bookmap is order flow. You're looking at the number of contracts that are entering that need to trade, right? And when you're looking at the volume profile over here on our market profile chart, what you're seeing is the number of contracts that actually traded. So to be clear, there is always going to be way more liquidity on, the minis than the micros. So you're always going to get much more important information from the minis than the micros. So yeah, I trade both ES and MES contracts. Depending on the position size that I want to take for a trade, sometimes I trade the MES, but I'm always looking at the ES because that's where the better information is in terms of liquidity. Kevin says, hello, Charles. Can you tell from the new buying versus short squeeze taking profits at key levels? Delta divergence, volume? Thanks. So how can you tell the difference between new buying versus a short squeeze? So I would say the answer is yes. You can absolutely tell the difference. It's not like you're always going to be able to tell 100% and be absolutely right, but yes, you can tell. So the first step in the process of figuring that out is you need to ask, where is the location that this thing is happening, and in relation to whatever has happened before. So let's just, to keep it really simple, let's just look at, Friday and the weekend. So Friday, the market was a bell-shaped curve. We can see that our time point of control is in here and our volume point of control is here. So we can say this area right here is a fair price to do business, meaning neither the buyers nor the sellers are really wrong there. If people were buying up here, they were wrong, right? The market told them very quickly that was dumb and reversed on them. If people were selling down here, they were wrong. The market very quickly reversed on them and told them you're dumb and came back to that fair price to do business. Okay. And when we look at the overnight over the weekend, what have we done? We've pulled that fair price a little higher. Okay. So that's a little bit bullish. It's a little bit of momentum, but for the overnight traders, they opened down here and they are set to close up here. So right now at this moment, this is a fair price to do business. And right now at this moment, we have sort of two-sided trade. As the market tries to go up, sellers are stepping in. As the market tries to go down, buyers are stepping in. So that's our context going into the weekend, right? Two-sided trade, fair price. When we, over the weekend, what is the information the market is giving us in 10 minutes when the market opens? If it were to open, right where we are right now, it would be saying overnight inventory is net long. For the market to have moved from here, from 68.76 up to 68.90, more people would have had to go long. If more people would have gone short, the price would be lower. If the exact same number of people had gone long and short, we'd be back at 68.78, right? So more people had to go long. So at this minute, the current inventory is net long. So that's the first thing you need, is the context of understanding what is the current inventory. Right now at this moment, are more people holding long contracts or short? We know they're long. So then we start to ask the question, okay, where will that change? Where will people start to change their mind? Well, if the market were to go up this morning, opening bell rings in 9 minutes, market starts to push up, right? What happens when we get to that overnight high? Right up there. Well, first and foremost, anybody that's been shorting in here over the last few hours, they're going to decide to exit those shorts. They're going to get stopped out. That's short covering. So we expect to see some short covering when we get up there to the high. Okay. So the market pushes up there. What are we looking for? A very fast pop. Boop, boop, boop. It might only be a point or two. It might be 10 points, right? But the point is the tempo. It will happen instantly, very quickly. When we look over at our Bookmap chart, what will we see? We will see large volume dots. In this case, they will be green, large volume dots, because sellers will be forced to go long very quickly there. And we will also, because I have the stops and iceberg setting, we don't have any stops showing up here yet, but there will be a stop that will show up on my stops and iceberg setting there as well. So then I know, okay, that's shorts right now. That's shorts covering that's making the market go up. And then the market will cool off and it'll come back down to this area around the overnight high. Okay, well, we know that the inventory is net long at this point, right? We know we've already squeezed the shorts we're going to squeeze. So if the market bounces and it starts to find support there, guess what that is? That's new buying. It has to be new buying because the inventory is net long. We've already squeezed the shorts. So if the market is still going up, it's new people going long. Okay. So then you know we're above the overnight high. We're getting new buying. That's bullish. We're going to keep going up. But let's say that same thing happens. The market pushes up there. We get that little bit of short covering. It comes back down and it doesn't find support and it starts coming back in. Well, then guess what we're thinking? If a majority of the overnight inventory is net long, okay, the market pushes up to that overnight high and they don't take profits yet. They don't have a chance to take profits and the market starts coming back down. What are those buyers who've been buying from here? What are they probably going to do? They're going to start to get out of their long because it doesn't matter whether they got long here, they got long here, they got long here, they got long here. They're all losing money as the market goes down. They're seeing their paper profits disappear. So what do we expect if the market gets above that high, comes back down, and it doesn't turn that into support? Liquidation. Boop, 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 boop. Same thing we talked about at the high. Very fast tempo. In this case, we're going to see big red dots. And we're going to see the stops iceberg popping up for stops from the longs. Okay? That's liquidation. So here's the thing. It can liquidate all the way back down here to Friday's closing price, and it doesn't really mean anything has changed. Why? We established on Friday this is a fair price. This is a great place for buyers to start doing business here. So if the market were to poke up there, come back down, liquidate, coming back down towards Friday's close, all we're doing is taking out the longs that got in over the weekend. That's not new sellers getting in. All right? That's just taking out those longs. It's just liquidating the current inventory. But what happens if we get up there? We get a little short covering and come back down. We don't get support. We liquidate down here and then we don't get a bounce anywhere inside the fair price. No one's willing to bid. And all of a sudden we're down and we're below yesterday's closing price, Friday's closing price. Well, now all of a sudden we're going to liquidate buyers from Friday, right? People that were getting long on Friday are going to start to get squeezed. Bump, 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 bump. And the same game we played up here, we watch when it comes back and we see, does it now turn that into resistance? If it does, we're getting short. So the key is to understand who is the current inventory. Where will they change their mind? Up here is where initially shorts will get squeezed. And then if there is new buying, there will be new buying and we'll keep going higher. Or if there is not new buying, we will pull back down. And this is the area here where the same thing's going to happen to the downside. If we push down here, we're going to liquidate buyers down here. And if we turn it into resistance, we're going to continue lower. If we don't, and we come back up, boop, 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 we're going to start to rotate back up because we're going to start squeezing all the shorts that we're getting in on the way down. So the tools that you use to see this happen, first is price action, right? That's where you see how the market got to where it is and where it currently is and what levels these things will change. And then the second thing you're using to see it happen is Bookmap. The nice thing about Bookmap is Bookmap will tell you in the moment while it's happening that it's happening. You got the volume pressure index. This will tell you when they're sweeping the order books. So you'll know this is a key level. This is a moment where something could change. By looking at the volume dots and what color they are and how large they are, you'll be able to tell how big of a squeeze was it. Did we get up there and just barely poke and take out anybody? Or was there a big, huge dot there? We just took out a lot of people. Same thing with the stops. You'll see that it stops. And when all of a sudden you start to see icebergs buying, that's the support. And the thing is, most people just don't think about markets in this fashion. They want everything to be exact, you know. Tell me when the 20 moving average crosses the 15 moving average and the blah, blah, blah. Like, they want exact things. The market is not exact. It's just an auction process. It goes up as far as it can go up until people change their mind. And then it starts coming down. And it goes down as far as it can go down until people start changing their mind. And then it comes back up. And if you know what to look for where, you can see those areas where those changes take place. You can see the areas where the market likes to spend time and bring in volume, where it likes to go sideways. You can see the areas where it instantly flips and reverses, and you can watch what happens when it gets there. And if you just do that for the next 6 months, you just perceive the areas where the market is going to go, and you just watch what happens when it gets there, you will begin to understand how markets work, because it's always the same story. And there's that phrase that history doesn't repeat, but it rhymes. Nothing ever works out exactly to a tick perfectly, right? Take the breakout of the balance area. If the breakout of the balance area were to work perfectly, we should not come back to the balance area high today. We should not come back to 68, 64. We should just immediately start to head higher today. But we could also come back to the balance area one more time and then turn around and head higher. That's the glitch of the markets. That's where things get difficult. And that's what we call randomness. Because even though there are probabilities that you can tie to one thing working versus another thing, the market doing this versus that, none of them come with a guarantee, because everything is always random and anything can happen at any moment. So when you can combine that understanding with what I just talked about, who's doing business where and what, then you kind of have the master key to trade the market, you know, because you know the probabilities, you know how to trade them, and you accept the randomness, and you know how to trade that, how to adjust. I'm sure I just confused everyone. Please ask questions. We got 1 minute till the market opens. Good morning to Rich, Jay, Griff, 230, Trevor, Will, Bill, Croco, Pete the cat. All right, the market is open. So for those of you that are just joining in right now, the overnight range, that is 68.73 to 68.94. That is our chop zone. So we're not taking any trades for the first hour. As long as we stay inside this range, we're just going to let them chop it around. If they get to the high and they get new buying, we'll be bullish for continuation to the upside. If they get to the low and they get new selling, we'll be bearish for continuation to 68.64, but not beyond it. And if we get a look below and fail at either end, we'll assume the market's heading to the opposite end and that we're just going to keep chopping. Chopping and grinding. Chopping and grinding. Also, very disappointed to see the bracket bots came back last week. So that's these liquidity nodes that you see above and below price, where they're kind of an exact distance away. It's usually about 10 to 15 points, and they move with price, and they never fill. They just constantly change as price changes. So it looks like we still have those bracket bots this morning, and that implies whenever we have those, the market is just harder to read. There's no simple way to put it. It's just when those bracket bots are on, man, there's a lot more confusing stuff that goes on. This is obviously a sign of, market makers hedging and doing whatever it is that they do. So I would describe myself as neutral to bullish this morning, but there is no action to take as long as we are inside that overnight range. And I'm hoping these bracket bots will disappear. Pilgrim says, when you're using Bookmap, do you focus on NQ or yeah, you asked that question. I already got to that one. Okay. Yogi says, please open the Dow. Sorry, brother. I don't trade the Dow. All the stuff I'm teaching will work exactly the same, but you're going to have to pull up that chart on your own screen. Good morning to Arjit, Crypto Rider, Dope Angel. Dope Angel says, looking at the candlestick, it is looking like momentum up is dying on the daily, so it might still come reverse before hitting the all-time high. Yeah, I think it's too early to have the all-time high conversation. That's for sure. So right now, my focus on the daily looks like it's running out of steam. Yeah, I think it's too early to make that call that you're making. So this is what I'm obsessed with right now. Higher highs and lower lows, right? So as the market was working its way up, it was making higher lows, which was pushing it to make higher highs. Higher lows, pushing it to make higher highs. Then all of a sudden, higher low did not get us a higher high. So we had to make another low. And so now the market is trying to find out, can we make a higher high? We didn't have another lower high and continue lower. We're dancing right on these previous highs, right in here. So I think it's too early to say this thing is running out of steam. This is just momentum, balance, and if we get momentum, it'll keep going. Like I said, even if we came back to 68, 64 today, I would not be bearish. I would have to see new selling below there to really get bearish. Otherwise, I assume we would just tag it once more and then turn around and head higher. Methinks we have momentum on the daily. Jay says the NQ and the ES are divergent. Say it ain't so. That's another thing that leads to very choppy, confusing markets. I would describe them as very similar. The balance areas are different. It's a different conversation. The NQ is a channel that it's balancing in as opposed to horizontal balance. But as far as Friday's range, it's a bell-shaped curve. So it's giving us the exact same information as the ES, and same thing with the overnight range. It's a bell-shaped curve with the majority of the time and volume in the upper end of the range. So right now, this is your potential look above and fail of the overnight high on the NQ. If they can turn this into support, I mean literally right now, and bounce back up and out of here, it's bullish. If not, you're heading back down towards those overnight lows. So I would say this is perfectly in line with the ES right now. It's balance that's trying to break higher. Jad's in the house. Good morning to you. Juju, good morning to you. The Gavin says, what do the letters mean? Okay. Since we are probably just going to chop around sideways here, let's do some explaining as to what you're seeing on the screen in case you're new. So over here on the left side of the screen, this is a market profile chart. It's just a particular type of charting software. And what it basically does is it shows us the volume profile. That's these little sections that you see right here where it's showing you the amount of volume. And it also shows us the TPOs. That's the letters that you're asking about. And essentially each letter represents a 30-minute time period. So the A is the same thing as like a candlestick between 9:30 and 10 a.m. The B is a candlestick between, 10 and 10:30 and so on and so forth the rest of the day. So the reason that we use the TPOs rather than the candlesticks is that you can compress them together. So let me just expand out this profile. This is what Friday's range were to look like if you were looking at candlesticks, right? Each one representing 30 minutes. When you look at that right now with your eyeballs, you can tell the market spent a lot of time and brought in a lot of volume in here. But it's hard to see like exact levels. Like where is the exact place where things tapered off? Where's the exact place where we ran out of steam and reversed? If you compress it together though, and you smush all those on top of each other, then it's very easy to see where those key levels are where something changed right there and right there. There's another one right there. There's another one right there. And so when you know where those key levels are, you can look for changes to take place the next day. So for example, this was the area on Friday where the market ran out of steam. Look at the opening price today. Tried to go above it, came right back down. Look at the taper on the volume right now compared to Friday. Less and less volume from the center of the range as we go higher. There's less and less volume tapering off. From the center of the range going lower, less and less volume tapering off. You see that? Look at Friday. Less and less, less and less. So the volume profile right now is telling us that the same thing is happening now that was happening on Friday. That we're balancing right on top of this balance area high. Okay? That nothing has changed, essentially, from Friday. Now, if we get down here and we start to get resistance and we get new selling, well, then something has changed. But right now, we're getting support. We're reversing. Okay? So that's telling us the same thing is going on. So that's what the volume profile and the TPOs are for, to help us see where those key levels are, where something changed in the past, and then recognize in real time today, now that we're back at that place, what's happening, right? Are we getting new selling? Are we getting new buying? Or are we not? So then over here, this chart is showing you the order book in real time. So these are the orders that actually changed hands at these price levels. This is the liquidity that wants to change hands at these price levels. And when you combine those two together, where should we be paying attention? And what should we be looking for? And then what actually happens when we get there? That's your edge in trading. Percy in the house. Good morning to you. I'm talking about a chop zone, baby. It's chopping. A chop zone, baby, this morning. Okay, so now we're at a very key level. We're at an important area for the market. Why do I say that? Well, we're right around Friday's closing price. Okay? So on Friday, there were buyers below here that took the market up. In the overnight, there were buyers down here that took the market up. So what do we expect today there to be down here? Buyers to take the market back up. So now as we're starting to poke into it, what are we watching for? Buyers. So we're paying attention to the icebergs. Do we start to get a bunch of green icebergs down here? And we're paying attention to the tick chart. Ticker symbol TICK. Tick chart will show us if we got buyers stepping in down here or not. If buyers don't step in here, if we don't poke down and find support and turn around and come back up, guess what the market's telling us? It's going lower. Because up till now, there have been buyers. So if there isn't this time, something has changed and the market is going a different direction. Looking for those buyers right now. Okay. So now we are getting new sellers down here. So now I'm watching 68.77 for resistance. If this becomes resistance, I'm going to start to get bearish. If not, more chop. That was a giant market buy. You can tell it was a market buy because we got the big green dot, which implies the delta was significantly more long than short there. That only happens when you sweep the order books. You can only sweep the order books by throwing in a giant order all at once. So either it's a stop or it's somebody choosing to hit the market buy button. And in that case, it was somebody choosing to hit the market buy button. And they're doing it again. So the chop will continue. Okay. So what we just got, it happened very quickly, but that's what we call a look below and fail of the overnight low. So that tells us the market is not going down yet, right? It's still going sideways. So now what we're watching is the halfback, which is where we are right now, 68.79. If this holds as resistance, it means we're taking another poke at the lows. If it does not hold as resistance, it just means we're going to keep chopping. We're going to keep going sideways. To resist or not to resist? Right now, that is the question. Chop, 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 all morning long. Chop, 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 while we sing this song. Gonna take it down, then bring it back up. Squeeze everyone until they're all feel stuck. A trader in the chat says, we have not seen them since 7 to 8 months, but I guess hope it was just a rollover algo that goes away after a couple contracts expire, after the old contracts expire. Yeah, I don't know what those bracket bots are, but I hate them more than life itself. I just don't like those bracket bots. They make everything more confusing. All right, so the halfback did not hold as resistance. So that means the chop will continue. The market is not ready to pick a direction yet. Gough, thank you very much for the nice words in the Discord. He says, can we go over gamma? He says he sees spot gamma levels. Yeah. So I don't want to go too much into detail on gamma in the Bookmap stream because I don't want to confuse audiences that are unfamiliar with gamma. But we do use the trace chart from Thinkorswim to kind of understand what's happening. I don't worry too much about these levels. So these are the levels that you see on Bookmap. They're just plotted out at the same place because Trace is looking at SPX. So that just shows us what's the equivalent level on the ES, because they're usually about 10 points off from each other or whatever. So I don't really worry too much about those exact levels. You can kind of think about them as support or resistance levels or places where something can change. But generally speaking, I'm much more focused when we're talking about gamma on the large gamma nodes. Where are they located? And then how are they changing throughout the day? And if you have one particular gamma level that's very, very strong, significantly bigger than any other. So this is one right here, 68.25 on SPX right now. That's a 98 percentile gamma level. So does that mean we're going down? That's roughly 40 points below where we currently are. Does that mean we're going down 40 points today? No, not at all. But it does mean right now there's a magnet pulling price down. And so if this disappears throughout the day, it won't matter. But if it stays there all day long, the market is more likely to head lower and try to get down to that level. But honestly, we don't need to worry about that right now. I take everything one step at a time. So right now, the only thing I'm worried about is the chop zone, which is this overnight range. And can we break out of this chop zone? So while I was just talking, we took a second attempt at breaking out and another one that failed. Okay. They didn't turn it into resistance and keep going. So I'm worried about the level here and the level here. And until we can get away from one of those levels, I don't need to worry about anything else, because this is the level where I'm going to enter my trade. If I'm going to go short, that's the level I'm going to go short. That's the only thing that matters to me. Once I'm in the short, then I can start to say, okay, how far can this thing go? So generally, the options data is not super helpful. It can be sometimes, particularly if you open up and you have like a massively negative gamma. Oh, man. I got to log in again. If you have a massively negative gamma, that can kind of affect the market right out the gate. But other than that, gamma doesn't really come into play usually until about an hour or two into the day, once the market has had a chance to react. I cannot tell you enough how important the first hour is as its own concept. Most days, the market doesn't know where it's going that day. It has to spend the first hour trying to decide. Are we going up or are we going down today? It has to play tug of war. It has to fake out one way or another multiple times. Then it starts to make its move. So all the data becomes much more valuable after the first hour of the day, in particular options data, because a lot of that is about hedging whatever people do in the first hour. You know what I mean? Okay, so we're playing the same game as before. We got another look below and fail of the overnight low. So now once again, we're watching the halfback, which is currently at 78 for resistance. If that holds, we expect it to poke lower. If it doesn't, more sideways. And if you're asking the question whether I'd be short here, the answer is no. Too early to get short. The Gavin says, what sort of entries are you looking for right now? So we talked about this at the start. It's very simple. If we get below the overnight low, 68.73, I'm shorting if I'm bearish. So we got to get down there. We got to see resistance, and then I'm getting short. Ideally, I will get short at exactly that level, 68.73. But it might happen, and it does happen sometimes, that I just don't feel confident. You know what I mean? The market pushes down there. It's getting the resistance, but I don't quite trust it. So I got a short, maybe at 68.70. I may not quite get that perfect entry, but the idea is simple. If you get below that overnight low and you get new selling there, which we have not gotten yet, each dip below has just reversed so far. But if we get down there and we get new selling, we stay down there, we spend time down there, we bring in volume down there, that's a short. To me, I would lock in profits around 68, 64, and then look to re-enter the short if we get new selling down there. And then the same thing at the overnight high for the long trade. If it got above 68.94 and it found support, I could go long there. And the target is getting back to 68.09. Okay. These things can change though. So let's say hypothetically, the market were to go lower in the B period, but then it were to turn around and start coming back up. Well, then I wouldn't need to wait for it to get all the way up to the overnight high to get long. As soon as it came back inside the overnight range, after first trying to go lower, not right now, because now we're in chop, but after starting its move down, if it fails to go lower and comes back up, then I could enter a long there as well. Okay. And if you scroll back to the beginning of this video and you watch the first 5 minutes, you'll see me explain why. It all has to do with longer time frame understanding. My longer time frame understanding is very simply, this is a balance area. If we successfully break out, we should be heading up to 69.20. Okay, that's the target to the upside. If we fail, we should be heading down to 68.10. That's the downside target. So how can I get myself positioned today, intraday, to catch one of those two moves? To me, that's the overnight range. That overnight high or that overnight low, that's where I get into what will be the long trade or the short trade. And right now, it's a no trade because we are chopping broccoli. Technically, I could have gone long just now as a look below and fail of the overnight low, but I was busy talking. So what are we noticing about the icebergs so far today? Earlier this morning, the icebergs were even, pretty much. And then we started to get a little heavier selling from the icebergs. Well, now what's happening? We're starting to get a little heavier buying from those icebergs. So this is telling us chop. They're trying to fake us out. They're trying to get you short so they can turn around and squeeze you, only to get you long so they can turn around and do it again. Shui Li says the severe beating of a futures trader. Not this futures trader. This futures trader said before the market opened that we were just going to go sideways inside the overnight range, and that's all we've done. So this futures trader is fine. But that's what it's all about. You got to learn. You got to learn. How's that song go? You got to know when to hold 'em, know when to fold 'em, know when to walk away, and know when to run. Right? You got to know when to do business in the market. If you had a bell-shaped curve on Friday, and you had a bell-shaped curve on all weekend long, and you're opening in the middle of the value area from the previous day, you should expect a lot of chop You should expect a lot of, now, if you're a scalper and you want to trade that and that's your thing and you're good at it and you like it, then great, go to town. Expect to take lots and lots of scalps, but at least know what you're dealing with. Know you're going to have a choppy sideways day versus a day where you open with a gap and there's already momentum, and either that momentum is instantly going to run out and you're going to fill that gap and then you're going to get a sell-off, or that momentum is going to continue and you're going to get short covering and the market is going to continue higher. Right? There are days where, in the first 30 minutes of the day, there's great opportunities for trades, opportunities with high probabilities of success. And there are days where there just aren't great trades and you got to wait it out. All that matters in the beginning is that you learn to tell the difference. Learn to know when it's a day to trade and when it's not. You solve that problem, you're going to take care of about 90% of your losses right there, because most of the losing that people do is forcing trades, feeling like they have to trade. Oh my God, the market's gone down 10 points. I have to trade. I can't miss it. And then you take a loss, and then you take another loss, and then you take another loss. And now you need 5 wins to pay back for your losses. And you start digging yourself a deeper and deeper and deeper hole. Whereas doing nothing and saying, let me wait for that perfect setup to come, maybe you only take 1 trade in a whole day. But that 1 trade is profitable and you have more money than you started with. And then you do it again the next day, and you do it again the next day, and you do it again the next day. The Gavin says, why not get long after the bounce rejected the overnight low? So technically you could. As the market was coming back up into the overnight range, you could have gotten long right there. And obviously right now you'd be thinking I should probably move my stop a tick above my entry because we're back down here. But that would have been an acceptable long trade right there. What would not have been an acceptable long trade would have been to have a limit order sitting in down here when the market opens up here and thinking, oh, it'll come down, it'll fill my order, we'll get a look below and fail, and it'll come back up to the opening price. That might happen. It literally might happen in the next few minutes. But guessing that that's going to happen ahead of time, that is not a good trade. So yes, once it poked below there and came back up, again, I was busy talking about options at that moment, talking about spot gamma. But if I'd have been watching this chart and it happened, that would have been tradable. You could have gone long there. Now, that's a setup where you would want to move your stop, right? There are some setups where you stay in the trade and you let it play out. You give it what we call breathing room, let it do its thing. And then there are trades where you get in and you instantly cover your ass. This one to me would have been a trade to instantly cover your ass because of the way the ticks look right now, because they're right on the zero. It's 50-50 at this moment, whether this thing is going to break higher or lower. So it'd be okay to take that trade, but you would have wanted to move your stop above your entry real quick. And obviously you'd be stopped out right now. So at this moment, you could short the market. For me, I'm not going to because the ticks are above the zero. But if these ticks get smacked down, you could short the market right now, targeting a move to 66. So again, I just want to emphasize to everybody who's watching this, to me, it's not really bearish if the market comes back to 68, 64. If it comes back to this balance area high, that's not really bearish. But it is if it starts to spend time down there and it starts to bring in volume. If we start to bring in volume below 64, then we're likely heading much lower in the days ahead, even as far as 68.13. Could happen even in one day, but at least, in the next 2 to 3 days. But as long as that scenario doesn't happen, any other scenario, us instantly finding support and heading higher, us poking down there and reversing, any other scenario is still bullish for continuation to the upside. Any final questions for me before I say goodbye for the day? Mark says, I'm working on an algo that changes sim profits into live. Well, that literally makes no sense. If you're trading an algo and it's profitable in a sim account, just switch it to a live account. That's all you have to do. Jad says, do we have an overnight poor high? Yes, it is a poor high. It doesn't jump out at me as anything special about it. I wouldn't particularly assume it's a target or anything like that, but that is technically a poor high. The message the market is giving me right now is artificial balance. That's what the poor high is telling me. And that's what all these freaking icebergs on both sides of the market right now is telling me. They are pushing it up just to get you long. Then they're going to bring it down just to get you short. And then they're going to do it again and again and again and again. Mark says, no, it's an indicator that changes sim profits. Listen, Mark, I don't like to stir up stuff in these live streams. I kind of just let people be silly and say what they're going to say. But what you're describing is literally impossible. So I'm going to go ahead and call BS on this one because that's not real. To be able to collect real money from trades, you have to take those trades on a live account. There has to be another human on the other side whose money you're taking. If the person on the other side is a fake computer, which is what sim trading is, that computer doesn't have any money for you to take. It's not real. It's made up. But hey, more power to you, man. Good luck. All right, guys. Well, with that, I'm going to say goodbye. Things are gearing up a little bit bearish here. I just really feel I need to emphasize this. I know I've said it 100 times so far today, but it is only bearish to get to 68.64. Okay. Odds are once it pokes below there, it's going to find support and come back up, probably even all the way through the opening price. Okay. But we might need a little dip first. Sometimes the market needs to break before it can rally. Only get truly bearish if we start to spend time and bring in volume below 64. Okay, because this is the type of market that tricks everyone. They convince you it's going to tank, and then out of nowhere, it just retraces and it just rips everyone's face off. So for now, it is okay to take shorts, but just don't fall in love with those shorts. Lock in your profits quick. And only if we get new selling below 64 do you start to fall in love with those shorts. Because more likely in my mind is going to be a reversal right back up. With that, I will say goodbye. Wish you guys the very best. If you are a member of the brigade, the Pirate Traders Brigade, head on over to the live stream. I will see you there in about 2 minutes. If you are not a member of the brigade, you might consider joining. You'll see there's a link at the top of the page there, piratetraders.io/join. You head over there, you sign up. It's $20 a month. You get these live streams from me every single trading day. And we'd love to see you there. Thanks a lot, everyone. Alessio says you could use a trade copier and copy it from a sim to a live. Yes, technically you can do that, but then you're trading it live. You might be entering your trades on a sim chart, but your actual trades are trading live on the live chart. That's my point. You have to enter the trade on the live chart to make money off the trade, because it's only on the live chart that there's an actual human on the other side of the trade. All right, guys, if you have any questions for me that I didn't get to, head on over to Bookmap's Discord and leave them for me in the Futures-Charles tab. Bye.